The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, going back here to the Diagnostic Trading Hour right here on TFNN.com. Of course, check us out, 9 hours of live trader commentary each and every day on TFNN.com, on Tiger TV. See our screens while we're talking you through the markets. Check us out live in the eSignal platform and while you're on the go at TFNN.mobi. Let's check out where the markets are at right now. We got the S&Ps up 2.5 points. We have the Russell up 3.7. NASDAQ currently up about 9 points on the day with the Dow down 6. Looking on over at our metals markets, we got copper currently up 0.3. We got gold down about 0.25% right now. Silver is down almost 0.5%. Natural gas pretty flat and unchanged on the day. We got oil moving pretty good, up about 83 cents right now. We got corn down 5.5. We got soybeans down 5.25. And checking out our FX markets, we got the pound dollar currently down 2 pips. The euro dollar is down 37. We got the euro pound down 23. Dollar CAD currently up 4 pips. Dollar franc is up 28. Dollar yen up 26. Pound yen up 50 pips on the day. Still not a big move for the pound yen. Nevertheless, it is up. Looking on over at the euro yen. Euro yen is currently, what do we got right now? It's up at 2 pips. So pretty much unchanged. Aussie yen is up 12. Got a pretty big move in the dollar index with all the, consistent in and out move going on. And then the dollar index is currently up 0.209, so that's 0.25%. And let's see, the treasuries are up 0.01. You know what? I just found out we actually are at 10 hours of live trader commentary. I think I said 8 one day. They told me 9. Said 9 today. They tell me 10. It just keeps getting bigger. So TFNN at 10 hours of live trader commentary. And I'm sure I'll say 10 next week, and they're going to say 11 because we just keep growing. So it's awesome. Glad y'all are joining us here at TFNN.com. All right, well, let's look at, we put on a trade this morning during the bull-bear binary hour. And so me and Tommy co-host a show going over, Nadex contracts, whether it be spreads or binaries or, whatever it is. And so we're going through, we're looking at this and looking at the gold chart, and there's some massive volume. We get this volume spike right in the middle of our show. 5,200 contracts. Well, you know how I trade. When I see a volume spike, okay, when a volume spike happens, I'm looking to go the other way as long as we break the low of that next bar. Well, we did. We definitely broke the low right there. Went on down. We got a short trade. So I went in and I shorted a few contracts. Also, we were up at the top of the range on the hour. Basically just set a new magnet level. And I had a target. What was my target? Well, I was looking last night, or not last night I was looking, but I was looking at the overnight activity for last night. And at 4:50 Eastern Time in the morning, we had a low 1284.1 with contracts hitting up at 4,300. Now, I figured either the market was going to go to 4,300 or, as Tommy pointed out, if it flies to the upside, we had a nice high volume magnet bar from yesterday back over here. And would have put us up at about, let's see, what would that have been? 1297. So somewhere between like 1296, 1298 area, but about 1297.6 was the technical level. And so we're like, we're going to one of those two levels. And we're trying to figure out, okay, what's the best way then to take advantage of the move on Nadex? Well, I was looking at the contracts. Gold is trading with like 1 pip wide bid offer spreads. Okay, so that's nice and narrow, and so I'm really digging the spreads over there lately. And so I'm like, okay, let's look at the spreads. Spreads were cheap. Okay, I put up about $400 or $500 on the trade, and I was able to put on 40 contracts, literally for I think it was a max $500 risk at the time of the trade. And so go in, put that trade on, and right here we went short. Like I said, 40 contracts on it. Now, just in case it went up and it hit that upper area, if it went up to our upper area and turned around and sort of surprised me and popped way up there, put on a hedge. That hedge cost me about $50 and $55 to be exact. And for the contract, just in case, like I said, it flew up, then I could take off my entire position at that point and still basically be right around break even on the trade. So I had two different ways I could go. I could have straddled it, but I found it was cheaper to hedge that upside profit or target potential trade. So I was like, there's a potential it may fly up to that, so let's go ahead and hedge that off. And so here we are a couple hours later. Market's taking its sweet little time. All right. So let me back a few things out here. We'll look at it and see what we can do. Where we're at the moment. So if you're following along, if you're in this trade with us, if you're still in it, then we'll see what's sort of our best move at this point. And where should we take it off? So far, I've just been short the entire time. Now, zooming in on it a little bit right here and looking at it, we are like at the expected movement on the hour. There's only about 15 to 30 minutes to go on the trade. Not a lot of time left. And like I said, we're basically at the expected move and with 17 minutes on the clock. The bid-ask spread is going to cost you about $40, but probably would be wise to look at considering taking the trade off. So we're just right at the close. And I should be able to lock in a nice profit of somewhere between $450 and $650, depending upon exactly where you take off the trade. And there's a couple other ways you can look at this trade as well. Okay? So one way that you can look at the trade is the deviation levels. And one of the things I like to do is I like to use the deviation levels to help me determine direction. And I've talked about this in the past a lot. I haven't brought it up a whole lot recently, so I thought it might be something that we dive into today, where we can go in and basically discover the good old 10-minute deviation system. So something that I picked up a long time ago, and it actually first became a stop system for me. And I'd use that to help trail my stops, but eventually I found that it did such a good job that a lot of times I would actually use it for a directional entry as well, just using 10-minute bars, deviation levels. Obviously, adding volume to that would just help advance the trade a little bit further. And so I've since added volume into that very simple system. So we'll go over to that today as well. And hopefully, let's see here. Let me do one more thing. So we're at the bottom of the close-to-close expectation. Let's see what we're at on the high-to-low expectation. I just want to check that on the trade because I think we have a little bit of room left. And go down here to expected range. Get rid of bar range. I don't know why I added that. And then click OK. Okay, so that'll pop over there. We have a little bit left to go. We've basically hit the expectation, just about. Let's see, we had an expectation for this hour, a movement of 2.6, and we've got up to, where are we at right now? Up 1.6, about another point potential move down there. We'll see if we'll get that. We only, like I said, have half an hour. Now, to tighten that up, if I want to go, I only have till 1:30. I don't have till 2 o'clock. I could go in here. I can change up my expected ranges and make them 30 minutes. And that's a good way to just tighten that up when I'm getting right there near the end. And going, hey, what is my expected movement left? I can even do this in the last 15 minutes of the day. I can make them 15-minute ranges. Okay? With that, I see that the expected movement here in this last half hour of that pit session, okay, is 2.3. And where we at on it? So I'm going to have to move it up a little bit so I can see it on the screen with you, because otherwise it'll go off the screen. 1.6 on 2.3. So we still have a little bit of movement left that we could break down. We're looking for about another 6 ticks or so. With that, we're probably going to put a fork in it and call it done. But let's see here. So we're watching. It's ticking. We got a few more ticks left on it. And let's see if it can break that down. If it can break down 6 more ticks, we'll hit right to the expected range. And be a good time to start taking off some trades. So, and it looks like we're getting closer and closer right now. I think I'm going to go ahead and start looking to scale out of my contracts at this point. And we'll see this update here on the close. But being on down there, where we at 1287 on a high of, what, 1288.5. So, what is that, 88.5, 87. That's going to give me, what, 15, 16. So, yeah, okay, so now we're at 1.9 from high, moving on down. Might get, let's see, we got 4 more ticks left for our maximum profit potential. I don't think we got to push it all the way. I think we're close enough to expiration to be worth just, potentially taking some of that off. So let's see here, where are we at? Let's go ahead and pull our tickets up. So right here, we got what's left of our position. Okay. And so hopefully, like I said, you were able to follow along and do this trade with us this morning. And just one of those, it's like, hey, we got to take advantage of this. It's working well. Got a spike striker. Everything's lining up. And so we'll grab that for the trade from this morning. And hopefully you're starting to close those contracts out if you haven't already. But ought to be about ready to shut down that trade. Okay? So let me move that over here for you. And we'll get it done. And don't forget, if you have any questions about this trade or any of the other trades, we try to do some live trades, a couple times a week on the show, add a lot of value, show where you can listen, watch, learn, enter, and exit before the show's over. And it shows you, you don't have to be sitting around all day to trade. And, of course, this show, this trade went a little bit longer than some of the other ones. But let's go ahead and capture that. We'll call that a good done trade right there at 1286.5.4 on that, and we'll call it a trade. Okay. Let's see here. So to review the trade, we went short at 1288.7. Okay. And we just took profit there at 1286.6, 0.4, depending on exactly where you got out. Captured over $800 on the trade, give about $50. And I'll wrap it up when we get back. Y'all stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at
727-445-1044. All right, folks, going back here to the Diagnostic Trading Hour. And it looks like it moved down a few more ticks. So, I mean, another $100 or so, you could have grabbed out of that, but you know what? I don't care. It was a good trade. Solid. Went short. Used volume to do it. Used expected movement to do it. So it fell on down. We looked at the expected move to go ahead and take our profit right there at the bottom of the expected range. We pulled that off. All right, well-executed plan, completely based on low risk, using the Nadex spreads. Okay, plenty of time using the end-of-day expirations. Volume reversal setting up with a volume spike. Expected range reversal set up with the exceeding expectations on that hour, and then take profit. Not quite as low as I wanted, but I was hoping to get down to 1284. You got that pink line down there. You can see a little, right around 1284. I was hoping to get down to that, but you know what? I was like, I was realistic. I'm like, it's Friday. It's the Friday before a holiday. I just don't know if the market's going to be able to do its little up and down oscillation dance to move far enough, fast enough by the close of 130. Now, it may do it by, the end of the Globex, but as far as the close of the pit, I was like, I just don't know if it's going to move all the way down there. So I wanted to make sure I paid attention to that, expected movement on the hour, and I was like, let's get really precise. Let's get right down to the 30 minutes. Let's take profit there. Now, as you can see, it's actually starting to pop back up. It did move down, and, we got it we sold a few ticks off the high. We bought a few ticks off the low. You can't ask for it to play out any better than that, okay? But anyway, so that's just hopefully, y'all were able to, join us in the trade. let's see what else is going on that we can do. And I know some people were, like I said, we were talking about that 10-minute deviation system. So why don't we pull up maybe a couple charts and see what we can find. Maybe we can walk through this, okay? And this is probably not the best week in the world to try to come up, to teach it. And because we're playing some pretty slow markets right now. But nevertheless, let's see what we can do. All right, so we're going to pull up 10-minute charts right there. And that's the easy part. Now let's add on some deviation levels. Okay. And let's get our little toolbar shortcut. Makes it easy to mark things up. And of course, I like to check out expected volume. And maybe even expected range. All right, so that starts getting the chart a little bit messy. Let's see. Let's move the expected range just up into deviation levels. Pull all this down. Or the one thing I want to really pay attention to on this more than anything is going to be this, and then we'll also throw on some spike strikers. It's just putting a few different things together. And ways to improve it. So I'll teach you the basic system, then we can add on and go, hey, what would potentially help us on this trade? But just the basic system first. Okay? And that's basically just understanding that markets like to move to deviations over and over and over again. We see the accuracy of them. And can we use that to help us determine trend, direction, stops, and all that? Okay? So with that in mind, that we're going to do it really basic, let me go ahead and back out. I'm going to back off some stuff. There we go. I'm going to pull this one off. There we go. So very simple chart. All right, now we got to go, okay, well, what direction are we going to go? How are we going to know what direction to go? Where are we going to tighten our stops? Is it worth it? So we start out, now this would be if you're starting in overnight trading. Start out, we get new deviations right here at 8 o'clock. Based on settlement, we wait for them to close above or below a level. And so right here at 2200, it closes up. Okay, so that means we are long, and we have a stop 5 ticks below this 10-minute bar. Okay? We're going to stay long until it closes above another deviation. Now, I said this may not be the best one, so we'll have to just follow it through. And so it closes above another deviation level. And so that means we're going to move our stop on up to 5 ticks below here. And then we're going to see if it closes below. Let's see, what do we got? 95. We got 94.99. So it did close below it and then closed back above it. If a 10-minute bar closes above a deviation level like this does, and then subsequently closes below it without stopping us out, and closes above another level, we're going to tighten it up again. All right? I'll keep going on this when we get back. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All righty, welcome on back here to the Diagnostic Trading Hour. So, let's just see how this would have worked out today so far. And so what we're doing is we basically start at 8 o'clock. That's just the easiest way I found to do it, okay? Figure out what market's closing up. Okay, so they closed above the settlement line. Therefore, we're going to go ahead and make that our entry. And just a few ticks above the high there. We put our stop 5 ticks below the low of that 10-minute bar. We're then going to leave it alone until it hits 95. Okay, when it hits 95, then we go ahead and move our stop up to 5 ticks below. Pretty simple. Okay? If it closes back below it and then closes, if the market closes back below it on a 10-minute bar and then closes back above it on a subsequent 10-minute bar, we're going to move it up again. So right here we hit or closed above, then we closed below at 4:40 a.m., then at 4:50 a.m. it closed above it. So that's where our stop is. Well, as you can see a little bit later, it came over and it nicked. It didn't quite hit this deviation level to allow us to move on up. Now, I have been lately using the deviation ranges, and that is also a possibility. So if you noticed, I now have a highlighted area around the deviation levels. So let me show you this, what I mean. And this is an addition from how we used to do a long time ago. But there's basically a 5% zone above and below. So I've also looked at when it gets in that range, potentially moving it up. I haven't finalized that as a rule. I'm still sort of testing it, working in it. Like I want it to at least close inside the range if I'm going to do that, if that makes sense. So But if it touches the deviation level, it definitely works. But I'm playing with the ranges, seeing if maybe we can get on that. And it's always tough. Making a trading system, you have to, look at what kind of rules, how you're going to trail your stops, how you're going to filter your trades. Anything you do, you got to go, does it give me more profit net at the end or not? And that sounds obvious, but you'll see like, oh man, that would have I would have got more money on that one, or I wouldn't have taken that loss or whatever. Yeah, but would you have missed out on winning trades? Would you have given back a lot of profit on other trades? So what would happen over the course of all your trades? And we still have over 100 net trades or more. And one of the algos I'm working on building right now, it's sort of cool. It goes through and it looks at what was successful on previous trades, and are conditions the same as that to see if it should be done. So just trying to really build the algorithm, the statistics, and put all the pieces together. Okay, so this is moving on up. Let's see. So that trade would have got closed out. We said right over here at 620. Let's go ahead and measure that. Get about 5 ticks below it. That'll put us right about here. So we're about 36 ticks on the trade. Okay, not too bad. Nice 36 tick profit. Now when it closes below that, not only does it have to break it, but it has to close below it. We got a short, and so we're going to go over here. We have a short. We have a stop just above. And again, we got to leave it alone till it gets all the way down here. Well, it doesn't. It turns around on us, goes against us. That trade gets hit. And so we get in a few ticks below, out a few ticks above. And on that trade, we don't give them like 14 ticks up. Okay, so up 36, down 14. Still positive 22 on the day. Now, it closed above when it did this, so now we're going long right over here. And so right on this one where we hit the stop, and that would put us in long at the exact same time because we're closed above already. So we'll just go in long right over here. So we're long now that we've closed above. We're out of the trade. The next bar closes above. We get in. Okay? So now that it's closed above, the market is going up, going up. We hit the range, so we're going to move up our stop. Our stop was, when we went long, was where it was right here. 5 ticks below this. Now that we've hit a deviation, and not only did we hit it, but we closed above it, we're going to move it on up. Okay, so we got that one. And so we've trailed that stop twice now. So right there. And then if we move on up, boom, it hits the deviation level again. We're going to go ahead and trail it up 5 more ticks. Comes back, closes below it. Does not close back above it without stopping us out. So where does that put us on the trade? That puts us up about 17 ticks. So basically sort of where we were at in the morning, up 36, down 14, up 17, give or take. I'm estimating here, give or take a few ticks. All right, so moving it on over. Looking at this, we did not close below the deviation level, so we don't go short at this point. We go back up. We don't close above the deviation level, so we don't go long. So we haven't done anything yet to reset the trade. Okay, so nothing has happened yet to reset the trade. We're waiting on a close above or below one of these deviations because we could just be stuck in a range. We don't just want to end up ideally trying to avoid buying at the bottom, selling at the top, all that fun stuff. Well, we go over here. And we do close below, finally. So we have a short setup, low at 95.06. And but we remember we got to go in 3 ticks below. 95.06 is our low there. 95.04. We don't break it. We miss it by 2 ticks. Okay, so it comes down. We have a pending setup, but no entry to go short because we don't break it by 3 ticks. But when that happens, that means basically we're waiting on that 3 tick short. We were waiting for it to happen. Never happened. What happened? It did close up long. Does it break 3 ticks above the high of that? Yes, it does. So now we have a long entry. So we're going to go over here. We're going to buy right here. So we bought on that. Let me mark the entries here. We bought there. We sold over here. We bought right there. We bought again to get in. I'll just mark all these little arrows to make it super clean. And then we got what a buy back here, right? All right, so we get in. We go long on that trade. Where's our stop? Our stop is way down here. and it touches a deviation level. Touches it, we tighten that stop on up. Okay? Goes on back up, we're waiting, closes above the deviation level. So we're going to go ahead and we're going to tighten that stop on up because it did. This one didn't close above, it just touched. This one closed above, we're going to tighten it. Now we're waiting on it to get up here and touch 95.89. Okay? As soon as it touches 95.89, we're going to tighten up our stop even more. Now, this is where it gets tough because you're up a pretty considerable amount on the trade at this point. You're at 48 ticks. That's $480. And so, you know, the best trading practice you can do is leave things alone and let your profits run a majority of the time. Okay, so technically the system is waiting on the market to get up to, again, 95.89. As soon as it touches that, we're going to tighten it up to the low of the bar that hits it. It's got about 45 minutes to do it. So far, the market seems to be climbing going into this weekend. Oil showing a lot of strength with all the unrest over in Ukraine and Russia. Okay, so decent probability it's going to move on up there. What can help you on this? So you're trading this and you're sort of flipping out, right? Because, you know, you're up a good amount of profit. You don't want, I mean, what if this thing ends up shooting up 2 deviations before the close? I mean, it may end up making a fortune more before the close. You don't want to give all that back up. Things still going, you know, we might get there. And so there's different ways that you can, you know, try to help yourself manage your trade. I mean, we're at 51 ticks right now. What do? Well, first thing I like to look at is expected volume. I like to see how is that going, okay? So let's add that on. Just looking at the simple 10-minute chart, and we saw a massive amount of volume there. I don't think that was technically a volume spike. We've had strong volume pretty much the whole day on oil. Been probably one of the best markets to trade today. So, you know, I unfortunately missed out on it. I should have been paying attention to it, obviously, with all the news going on. But I was trading gold, and I had my eyes on that. But anyways, just to go through the 10-minute deviation system with you, I thought this would be just to give you a perspective of a different market. And so it's moving on up. We got strong volume pushing up. But we had that big volume spike. And this is the spike that it obviously would make me nervous as well, right over here, because we got this massive volume spike of about 6,500 contracts. But notice we had that early this morning at 9 o'clock, and the market kept going. So now it oscillated. Notice it didn't go a whole lot further. Went from 95.27 to 95.48. About 20 more cents is what we got out of the market. And before it oscillated and pulled on back down. Well, that's more than enough to get us up to our 95.89 and tighten our stop up. Okay, so that's what we're shooting for right now. So that volume can help you out. Going back and doing magnet pricing is going to be one of your strongest things you can do. And you have to go back pretty far because you want to find, you know, magnets up at, like, what can I find up here, you know, at this level. So let's see here. We're talking about up at the 95.90 area. You know, is there a magnet up there that we're shooting for? So this is 95.37. And that was right in the magnet range there. So you could definitely put that on the magnet level. We can basically go right over here and just label that. That's magnet. So that was really the last magnet level. And we broke through that. So let's go back and look at where is that in relation to where we are right now and today. Okay. Well, that was right over here. Look at that. That's where we came right in. And the market, just check out how it just hugged that magnet. Right? See that? 95.37. So it came right up to it and just held onto it for dear life. Kept coming back. Finally, it took a lot of volume to bust through and get away from the magnet. It's like some tractor beam or something. You got to turn on all the, you know, additional force to get it away. It does get away. So, backing on up again, where would we expect the market to go? Now, we have the deviation level, but what else do we have that's above the market that could help us? So that's where we're going to start checking out this range. And we can see that 95.37. I mean, that was a magnet for, I mean, you can see why that thing, like right there, right there, right there. That whole range right there, definitely a very strong magnet. But what about above it? We got some other magnets up here. So let's back over here and pull this thing out and go, okay, well, with that in mind, what do we have? So there's a little range right there. So I think we got that pretty well identified. But then we got another magnet over here, right at this level over here. At 96.33, you could say on the low side if you want to give it the range. Okay, 96.18 is where we're at on the market right now. And then I can also go, let me add in my current price. So that'll do is it'll let me sort of see where the market's at in relation to that at the moment. Pardon me. So we got this range. That just barely missed expectations. Trying to see if we got a solid magnet in between. But it looks like that's about what we're going to get for the next magnet pricing level. It's like we sort of touched on one like right in the middle. Right here. If we go into that, we can look at it. It's a magnet that's been broken. So we'll just change the color a little bit. But we have a magnet level like right in the middle. And just seeing that volume that comes right up to the level. Okay? And we can see that level actually has held quite a bit. So right there. So it is a solid price level. It's based on just where the market goes to where the orders are. Comes back down to that magnet, bounces up here, comes back down, bounces back up. And so market goes on up. We won't worry about the upper magnets because we're not in that price range right now. Market comes on back down, oscillates around this magnet, comes down to this established. Actually, I hadn't established. This is an older one. It goes back up to that established magnet, comes back down over here, establishes another magnet with it, goes back up to the magnet. So they're just playing in the range, flies down. We're not plotting the lower area right now. So now we're going to get towards today. Get a little closer. Market goes down, 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 and bring it on up. Crisis strikes out. Market starts moving back up towards our magnet pricing. Boom, hits the magnet, goes up. Oh, look at that. We didn't even try. I could not have tried to do that if I wanted to. Look at that magnet we put right there in the center. Perfect. Right at the deviation level. I mean, I literally couldn't. I mean, wow. Okay, so that was established based on where the market established the only other magnet we had in between those two levels, which also is right at a deviation level. So market still moving in our favor. We're just a few ticks off right there. So we'll zoom on in. So it just ticks away. Right there we go. Okay. And we've got up to a high of what? To a high at 95.82. We're like 7 cents away. What we can do is we can put a price alert in, hit new. So what do we want it to be? 95.89. So I'll just put it like, penny before that. And then click OK. And what that'll do now is it'll actually fire an alert off for me when it hits that. So I'll know to go ahead and tighten my stop on up even further. And when that happens, let's assume that happens in this 10 minutes. We've got a minute left. But it'd be up to 95.66. All right, stay right there. We'll be back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, so welcome on back here to the Diagnostic Trading Hour. As like I said, we're adding in different levels, so we have just the deviation rules, which says it has to hit the deviation level, okay? But as trades take off, I said you're going to get sort of nervous. What can you do? The best thing you can do is have magnet pricing levels in there for you, okay? And so you go back and you get the magnet prices. Try to find a couple magnet bars where you can get a high and a low, like a range, okay? So a magnet range. And sort of how you see like we had the little ranges around the deviation levels. Try to get a magnet range, because what that'll do for you is it'll let you know, hey, these are the strong points. It's going to come into this area, and it's either going to have a lot of volume to bust through to the next magnet, or it's going to have a pretty decent amount of volume to pull back to the last magnet, or just oscillate, on that magnet, like we've seen so many times where it just gets to a magnet, back and forth, back and forth, back and forth. Okay? So before it to bust up and go to the next magnet level, we're going to need a lot of volume. Do we expect a lot of volume at this time of day? At 2 to 2:30, there can be some crazy volume. We can see some crazy moves. We're going into the weekend. Most of the traders who went long on oil, a lot of them, I guarantee you what happened right at the top of the hour there at about 120, they were taking profits. Okay, so the thing was flying up, and all of a sudden this take profit started happening. That's why things started slowing down, 120, 130, okay, 140. Things started slowing on down, and they're just putting those profits in their pocket. And that caused us to get those, small up bars and a couple doji bars, and now we're in a down bar. Okay? So you have a couple choices when this goes on. One, I'm reading this, I'm going, okay, that's a pop from the long. They're taking profits. What am I going to do as a trader? What's the best way I can play this? I can wait on the 7 ticks for the deviation level, which has wisdom to it. Let your profits run. I can also go, you know what, there's 30 minutes left in the day before the pit itself closes. Things, I personally, I'll let you know, I hate the last half hour of oil. And it's not that it's even hurt me that bad. It's just I don't ever feel like I have a good read on it personally. So I like the opening of oil, but the closing of oil, it seems like I don't know. It's all over the place. And so I'm not a big fan. I'm usually out of oil at 2 o'clock. So if I'm in an oil contract, that's my preference, is to be out of it, because I've seen so many weird things happen on the close, and then add in a holiday weekend with oil issues happening over, like I said, in Russia and the Ukraine. Just probably a trade I don't want to stay in. So just that fundamental reason of what's happening overseas, and then going into a holiday seasonality, and then time of day seasonality, knowing that things get a little nuts in the last half hour, that alone tells me get out of oil at 2 o'clock. So that's one rule I use. Now, that's oil. That's not going to be everything else. Okay? So looking at this, I go, okay, well, I haven't got to my deviation level yet, but I have got to the magnet zone. Okay? I touched that, just sort of like touching a deviation level. I'm up a lot of money. Am I going to be upset if I walk away with an additional $400 plus the 36 plus the net 3? If I walk away with, $700, $800, $900 in my pocket today? No, I'm not. And the trading day's about done, ready to go on vacation. That'd be a good reason. Now, I'm not just going to take my profit. I'm going to tighten my stop. But I would be upset if I gave up $200, $300, 20, 30 ticks when I only have 30 minutes left in the day on oils, on the pit session to be able to make money on it. So to me, that's a good reason to go ahead and tighten my stop up. If it comes down, which it did, it hits it, you're done, you're out of the trade. But we're talking about using 10-minute deviations, reading a little bit of volume, and tying in some magnets to get some expectations of what it's going to do. Okay? All right, y'all have a great day, and I will see you on Thursday on the Diagnostic Trading Hour. I hope everybody has a great and safe holiday weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.